What is going on, investors? Time to talk about a JP Morgan, ticker symbol, a JPM. This company, like a lot of banks, reported earnings today down about 2% actually with JP Morgan. Although when we get over the stock chart, this stock has been on a monster move after the Fed announced that banks like JP Morgan can resume buybacks and increases in their dividends. We'll talk about that when we get over to the stock chart. We'll also take a look at the financials. Spoiler alert, they're actually pretty darn good. Interesting things going on here at a JP Morgan. So JP Morgan, interesting stuff, because I just did a video that I recorded on Wells Fargo where they're talking about cutting expenses, cutting branches. JP Morgan, take a look at the quote from the chief, Jamie Dimon. He said, "I would love to find $2 billion more for investment." So he actually sees investment going, it was about $66 billion this year. Next year, he sees it at $68 billion, which is $2 billion more. I think he wants to find $2 billion more than that. So I don't think he'd like to get it to 70. So tale of two different banks. Wells Fargo's in cost-cutting mode, and you can go look at their share price and the direction that stock is going in. JP Morgan is in investment mode, and it is soaring. So interesting. Again, tale of two different banks. Interesting stuff. Now, JP Morgan, obviously big on the credit card side, probably a little less on some of the other stuff that Wells Fargo plays in, like consumer banking and mortgages. JP Morgan, much more entrenched in the credit card. And now they saw their delinquency rates tick down in December and actually stay pretty low. And in fact, they're pretty low for most. And in fact, when you look at savings rates and deposits here in the United States, they're actually really high. And so people are, I don't want to say this is broadly speaking, but a fair amount of people are actually doing pretty well. They have a fair amount of savings. They've paid off debt. They're not delinquent on their cards. Obviously, that's not across the board, but in general, JP Morgan is seeing that. Now, interesting thing happening here. Not always something that I rely on here, but a price to tangible book value is a good way to analyze these bank stocks, because tangible book is if you just liquidate every single one of JP Morgan's asset and give the shareholders cash on that, you will get the tangible book value. And so any premium you pay over that is the price to tangible book value. JP Morgan right now is trading at about 2.25 times tangible book. And we see here, every time this stock in the last 3 years has approached that level of price to tangible book, it has sold off, and is actually sold off pretty significantly. And when we get over the stock chart, we'll actually see we are retesting these highs that we made right before the virus just shut everything down and collapsed a lot of stocks, at least in the shorter term. So we've kind of made this U-shaped recovery, and so we'll see what happens with JP Morgan. Now, jumping over the financials, we'll talk about the stock chart in a minute, see if we want to buy shares now, add shares. I'm certainly interested in that since I'm in this stock as well. Let's just take a really quick look at the quarterly trends here. We've got our total revenue here, and then we've got expenses here. So we've got our revenue here, and I love how they just give you quarter over quarter over quarter, and this would be year over year. Year over year, we're up about 3%. Quarter over quarter, essentially flat. Here's our interest expense here, coming in at 16 billion. You see it was about 16. That added up to 66. That's what I talked about here, where they're coming in at 68 billion, and it looked like Jamie Dimon wants to add another 2 to that. So he's adding that would be almost $1 billion a quarter more than what they did this year. My opinion, that's good. When you have banks in the sector like Wells Fargo that are in cost-cutting mode, I want my investments being aggressive and going out and capturing that business that could potentially be lost. JP Morgan could potentially be doing that. Now, pre-provision for profit here, here's what it is before kind of you add back in this provision for credit losses. Notice that it's in parentheses. That means JP Morgan is adding back in $1.8 billion, because you see here in Q2, they provisioned $10 billion for losses. Holy moly. I remember we did videos on this. This was like alarm bells ringing. They did $8 billion in Q1, $10 billion. Notice in Q4 19, a year ago, they did $1.4 billion. I would say that's somewhere in a reasonable range. You see here in Q3, it shrunk to $611 million because they really unloaded a clip here in Q1, Q2. Notice they think they went overboard a little little bit. When you take a look at the delinquency rates, the deposits, they factor in, I'm sure they have like big brains and computers behind this. They figured that they can add this money back in. This is why net income just ballooned to 12.1 billion, because you look, they made 2.8 billion here, 4.7 billion here, 9.4 billion here, boom, 12 billion here. But look, revenue is basically flat. Okay, it's even down over some of these periods here. It's because this provision for credit losses, again, this is money they're setting aside. They didn't necessarily have to pay this money out. They're just anticipating potentially paying this money out. But with fiscal stimulus, $600 checks, potentially $1,400 checks, tax credits, grants, PPP loans, all that stuff is not, they're finding that they're not having to use this, okay? And so you've got 1.8 billion coming back onto the provision, and that's why you get this massive profit. Net income coming in at 12 billion after you factor in some other stuff. Again, way over any other period that we have here on a record. That gives us a massive $3.80. Again, they're paying a cash dividend of 90 cents per quarter. Hello, this company can raise their dividend. I would expect them to do that significantly in the coming years, because you take a look, even in a bad quarter, I would say this is not necessarily a bad quarter, but they only earned 4.7 billion. They did 139. Okay, that's way over 90 cents. Okay, they could still reinvest in the business, still have plenty of money left over from profits, and increase these dividends. Take a look, in a more normalized environment, you're getting up at over $3 per share in earnings, and they're only paying 90 cents. So this dividend is something that could go up. That could drive the stock going forward as well. I think with JP Morgan, you've got a little bit more safety here with the dividend going up, buyback coming in. Whether they do a buyback dividend, I would guess they do a combination of both. That should help the stock. Okay, now, what's interesting here is this stock, everybody has their opinion on technical analysis. I'm not in here talking about spinning tops and spinning dojis and all this stuff. That's more for day traders, but supply and demand is all about price, okay? And so we have price action on this chart. This is what this chart represents. We made an all-time high here. When the price got to here, people sold the stock, okay? When the price got down here, people bought the stock, okay? That's all I see here. And there's different levels of certainty when you take a look at the stock. So the stock made an all-time high. This is where we're at right now. Two things can happen when you get to these levels. It pushed through, got rejected, okay? I would expect it to try to retest it again. You want to see if JP Morgan's going to break through here, you want to see a big solid green candle up above here and kind of stay above here, and then probably be confirmed again by another green candle. That would make this level here at about 139, we'll just call it 140, round it up to 140, would act as an area of support then. The stock would probably come back down to 140, but potentially have a higher probability of bouncing there. Now, if it keeps hitting its head on 140 and get rejected, well, it's coming back down. Look, the sellers are going to, more and more buyers are going to dry up here, and sellers are going to step in, and the stock could retrace. Okay, 130 is a spot. Now, the broader market starts to sell off, banking sector sells off, the economy deteriorates, whatever it might happen. I think the first interesting level for me is 118. Okay, we had multiple times this acted as a level of resistance. Once the stock broke here, it was a significant break upwards. Once it broke down here, it was a significant break downwards. So this would be a logical spot where the stop could take a breathing point and take a step back. Investors could reevaluate things. So that would be where anywhere inside this box, I think, if you believe JP Morgan's going to raise their dividend, the economy's going to come back, vaccination's going to go well, those types of things, that should play well with JP Morgan. This trend that we're in, look, the shorter term trend, intermediate trend since March is absolutely straight line upward. If that trend continues, this stock will likely head higher. If we have any kind of trend reversal, in my opinion, it would have to take an entire stock market reversal, which a lot of people are predicting or anticipating. Well, then this one will come back down to earth. So just some things that you want to think about. So I love JP Morgan. I like that they're reinvesting. It would be near the top of my list. If you want a bank stock, you want bank exposure, exposure, you can come in here at JP Morgan. Now, the other thing you could do is if you don't want to try to pick winners and losers, the XLF ETF will give you almost identical performance to that. You got a 1.9% yield. It will likely go up. You don't get the benefit of like buybacks and then stuff like JP Morgan doing reinvesting while competitors are kind of cost cutting. You don't necessarily get that kind of alpha, but if you want exposure to the financial sector, if you're underweight this, if you're overweight Tesla and Plug Power and all these EV stocks and you want a little exposure to something else, well, the XLF will give you a little bit, and at $30 per share, not that bad, especially if you don't have fractional share buying in your account. So hopefully you guys enjoyed this one. We'll be back again soon with more videos. Consider hitting that like button if you enjoyed this video. We'll be back again. Thanks again.